Bitcoin September returns have typically been negative, and today the token is trading below that key $60,000 level. Joining us for more on this, we've got Sean Farrell. He is FundStrat's head of digital asset strategy. Sean, great to have you on with us this morning. So we have been talking a lot about how September is historically the worst month of the year for equities. How much read-through is there from that seasonal and technical strategy for equities over to Bitcoin? Is September a tough month for Bitcoin as well?
Hey guys, thanks for having me, and go Birds. Yeah, I mean, look, historically it is the worst month. I think if you look at the historical averages, September really is the only month in which Bitcoin has an average negative return. But, we like to advise our clients and subscribers that, you can't just look at seasonality in and of itself. There are some, structural things that are endemic to seasonality, like lack of liquidity that we've seen really take a toll on crypto markets over the past couple of weeks that do weigh on prices. But really, for us, we do think you should account for those seasonal effects, but really be more focused on what the Fed's doing, how liquidity conditions are looking, and make sure that any of these macro factors are superseding any broad seasonal factors that people just slap onto analyses.
And so with that in mind, I mean, what are the biggest events that are still left this year for crypto that investors should be keeping tabs on to try and figure out what the long-term kind of lead looks like for not just Bitcoin, but Ether and even some of the altcoins as well?
Yeah. So the big thing is obviously you had just alluded to the jobs numbers this week. I think, rate cuts, I think a lot of the market right now is skittish about rate cuts, frankly, because historically they have been at the precipice of downturns in the market. But, rate cuts are not necessarily bullish or bearish without, taking into account the context in which those cuts transpire. And so, our money is still on the soft landing path. I think a lot of the softness in the labor market isn't as much reflective of a business cycle turning so much as the labor force expanding. And so, I think once we get some, soft but non-recessionary jobs numbers, hopefully this week and next month, we'll have more investors skew away from that recessionary risk and back towards soft landing into year end, which is very constructive for crypto prices. And then the other thing, obviously, is the election. I think it would be silly not to view the election as a critical factor that will come into play when thinking about crypto prices. We kind of, our in-house view is that if Trump were to get elected, that would certainly slap on a premium to crypto asset prices, Bitcoin, a lot of alts that will now have a clearer path forward in terms of market structure and legislation that will support their growth here in the U.S. And so certainly that is another factor to contend with as we go into year end.
Sean, it's interesting, too, being able to track some of the mining operations for crypto in the public market as well, and the cost of electricity that some of them are at least monitoring at this juncture, the rise that we've seen comparative to 2019 even. How much is energy, especially considering the kilowatt hour costs, how much is that impacting miners' operations and the returns that they're seeing right now?
Yeah, so a lot of these miners already have embedded PPAs, and so they don't, the volatility around energy costs don't affect them as much in the immediate term. Long term, certainly that is a consideration. I think right now the big concern is that, their unit of account, their revenue line item is right now, well, it's consolidating, it's chopping sideways. But, I would say right now, just high level, the marginal cost of production for a lot of these miners is around, say, low 50s, maybe high 40s for some of the more efficient ones. And so, a lot of them are operating on razor thin margins at this point. So for the miners to really, become more profitable and for that their equities to benefit from that operational leverage that they do have, we're going to have to see Bitcoin prices go up. I'm not as concerned about energy prices in the immediate term, but long term, certainly.
So when you are thinking about the path forward for investors and Bitcoin holders here, what should the thinking be and the strategizing be for them throughout the month of September, which is typically rough, as you've mentioned, but also as we head into November and have all of these risks to come that are difficult to price in, these unknown unknowns? What should investors be positioning around?
Yeah, so I think what's important, I think it's important to step back from a high level and understand, acute trading risks versus cyclical downturn risks. And if you step back and, listen to Powell at Jackson Hole and think about the Fed's positioning around markets right now and how they've shifted focus away from inflation towards employment, they've kind of taken away the right tail, or should I say the worst case scenario for crypto, which would be a stagflationary period in which the Fed, in which real growth is slowing and the Fed has to step up and be hawkish regardless of that fact because inflation is soaring. That's what we had back in 2022. That is the cause of a cyclical downturn. Liquidity conditions tighten. And we possibly head for some economic calamity. That right now is not on the table, just due to the posturing from the Fed. And so you kind of the scenario where you have either a soft landing and the business cycle continues to expand, liquidity continues to expand, or you have a recession in which I will concede there is significant acute downside risk, but we are certainly going to meet any kind of recession with more easing, more liquidity, in which case, Bitcoin will be the fastest horse out of there. And so, the long tail cyclical risks are kind of off the table. I think heading into this, heading into Q4, certainly we recommend keeping a little dry powder on hand for any kind of downside volatility. That's how we're advising clients right now. But we do think overall the risks skew to the upside.
And just lastly, you had mentioned this earlier, Sean, and we know that both political candidates are trying to win the approval or at least get some of the mind share from crypto holders out there or investors. And we know that Grayscale as well, in the Harris poll, they had also run a study asking the question of, is 2024 the Bitcoin election? Is this the Bitcoin election from your perspective? And I mean, even when they ran that poll, it was two different candidates actually. So what could these candidates say that ultimately win over Bitcoin or crypto enthusiasts?
Yeah, I mean, it's pretty simple. I think, it is unfortunate that it has become a partisan issue because I think, there are qualities of Bitcoin that are endemic to Bitcoin that certainly, play to the interests of people who skew to the right side of the spectrum, the political spectrum. But certainly there are aspects of the technology that really play into a lot of the themes around, access to banking services and holding, the elites accountable, that play into a lot of the themes that the left presumably identifies with. So it's unfortunate that it has become partisan, but I think that either party, and one has already done this, that supports the freedom to self-custody, to transact, to mine Bitcoin in the U.S. I think that certainly is that's enough for me to label them a crypto proponent. I think another big thing would be to come out and support the proliferation of stablecoins. Stablecoins, I think, are outside of Bitcoin the one product that crypto has created that has clear product market fit. It is a great way to extend the dominance of the dollar while also leveraging this new emerging technology.
Certainly. Sean, great to get some insights from you today, and thanks so much for teeing up and previewing September plus Q4 of this year. We appreciate it. Sean Farrell of Fundstrat. Thanks.